And we are live. Okay, I'm going to give everyone a chance to arrive here. Thank you very much for joining me. And we'll get ready to kick off this new week. And actually the final day of Q1. Okay. All ready to go here. Got my notes ready. I'll give everyone a chance here to arrive. I think I might be a minute or two early. And we'll get ready. Okay, why don't we kick this off? I think it's as good as time as any. Pardon me, get my notes here ready. Welcome. My name is John Davies. Thank you very much for joining me. This is our daily talk, crypto talk from beautiful London, England. A nice early spring day here in beautiful London as we conclude Q1 2024. So it's crypto talk for the 31st of March 2025. I'm John Davies. Thank you very much for joining me. When I started this discussions a couple of weeks ago, my intention was to introduce the DeFi, Web3, to those more accustomed to traditional finance, those that are more accustomed from the aspect of just straight compliance and what traditional finance was, and also the great investment opportunities to those more accustomed, again, to traditional finance or traditional investing. It's been my belief that the traditional finance world hasn't really been spoken to correctly, isn't quite. People don't quite understand it. The best examples is that I can get is that not long ago, not a book, not terribly much different than this that I make notes in, would have been your passbook. Not that long ago, really, 2 generations ago, would have been at your bank. Someone would have wrote down your deposit as you came in or your withdrawal and then stamped it, and that would have been your approval. Oh, sure, we went through changes in 1973 with SWIFT, but these things are slow to develop, and our world has went through extraordinary growth through the computer era of the 1970s, 80s, 90s, and everything on. But much of our banking system is stuck within a debate between, it sounds more like they're excited that you got a Pentium chip inside or something like that. It's old. Swift takes days, whereas something like, use of Link, Hedera, takes seconds. Swift costs a lot of money. Try to make a transfer, an international transfer, using a traditional means, whatever it might be. See how much money you spend, at a Western Union compared to, say, just a simple transfer to a wallet, right? Using, as I said, Link or Hedera, something of that nature, and it's extremely inexpensive. Our traditional banking structures are stuck in the past, and that slows economies down horribly, and it's not efficient, nor is it really democratic. The end user, the person who produces the goods, isn't really getting as much of the money, and they're really cutting up so much. I've got a lot of people that I want to work within soft commodities, the agricultural sector, as an example, across the world. And I'd like to see them get more of the money as opposed to every little system, having millions of partners in the banking community find a way to take their cut, and the actually person who produces something less. The Satoshi's blockchain, seminal white paper changed all of this, and it's opened up a world of opportunities. But still, traditional finance doesn't quite understand. But that goes to that contention that I believe, and I said this in 2014, maybe a few years before that, that it goes beyond just Bitcoin. It's not just Bitcoin. It's the technology. That's the big thing here, the technology. It's more than just Bitcoin. It really is. This was before we even had the term DeFi, decentralized finance, and certainly well before Web3, what we consider now, would learn later term as Web3. Absolutely the case. But that's why in 2014, I opened up what is the first from every point of angle that I've asked people, and there's certainly not much, press about these kind of things. I opened up the first Bitcoin risk management desk, the first risk management desk in the crypto sphere. Because if you manage risk, if you fail to manage risk, means risk will manage you. And if you drive home risk management, you help risk management, you will broaden institutional adoption and it'll trickle down through the economy. That's been happening, certainly with the advent of the opportunities that SIBO particularly provided. That's accelerated. You can see it now. But things are coming into a stall right now, and it would be foolish to ignore it. So here it is at the end of this quarter, the end of Q1, and the bright promises have been dismal performance. Let's be quite honest. It has been hellacious performance from it. Many people wanted to attach their hopes and dreams, I think that's the best way to put it, to politicians embracing Bitcoin. And that might be a strong reason why you might like it, without question, why you might be excited about it. But politicians are not the answer. Adoption. Matter of fact, it's part of the problem. And if we look at this, and we'd be foolish to ignore these things. If we take a look at, say, none worse than Ethereum, its performance has been absolutely atrocious. But let's say we look at my personal favorite within the altcoin sector. We look at Link. Well, if we consider the performance of these over the last 30 days, it's appalling. You have to deal with facts. See things how they are, not how you wish them to be. See things how they are. Well, Link in the last 30 days is off 7.4%. That's nothing cute. That's not quaint. That's not comfortable. That is a massive drawdown. And that's just the middle of the pack. Hedera, great company out of Dallas, is off 30%. Algo, extraordinary speed on Algo. A lot of great things, Algo, off 26%. And if Wall Street 2.0 is Ondo, why is it down nearly 22.5% over the last 30 days? SUI, which I think there's a lot of positive things to consider in that, off 20%. Ethereum's just the ugly stick written all over it. Last 30 days off 16.1%. And Aave, what we understand, 50% of decentralized finance runs through Aave? Well, that's an ugly story if we consider this great crypto development world right now is off 14.6. Avalanche off 12%. Sol is off 10.1. As I said, Link suffering, limping into off 7.4%. And Cardano and TRX are the only ones in the last 30 days posting positive results. Cardano up 2.2, TRX 0.4, Bitcoin is off 2.5%, and XRP, my least favorite probably of all the altcoins, but one that has a unique area because it has such great political risk management, that being the associations of their CEO, Brad Garlinghouse, has achieved. And that's something, and it has to be considered within it. That's off 2.8%. In other words, you embraced crypto at the time of the election, thinking this was going to be the answer. Now you've watched a vicious and ugly drawdown. I told you this was likely coming. Did you take appropriate positions to do it, to nullify the risk? Probably 99% of those watching this, listening and repeat, but there's not many watching at presently, will answer, unfortunately, they did not. You manage risk before risk manages you. Do not think politicians will take decentralized finance and try to centralize it into their location, their specific, and take their credit, and it will get positive responses. Okay, there is the awkward side of it. Too much. We need some regulatory action, or we're going to get these ridiculous situations within meme coins and sometimes NFTs. Without question, we need regulatory, but we need it in a lot more of a broad brush as opposed to situation in one community trying to be the driving force on that. I'm very much in favor of political support, but the proof is in the pudding here, And I can say that for a variety of reasons. One, look at your damn portfolios. If I was your portfolio manager, or you were my portfolio manager, and I've just had a drawdown, oh heck, Dara off 30%. Um, what did I say? Link, 7.4%. If you're the person you're listening to in crypto sphere didn't warn you of that, if they weren't concerned about a drawdown, a major drawdown like that, if it was someone managing your funds, they're not worthy of managing your funds. You manage risk, or your risk manages you, or a son of a bitch like me who's been in this industry for 42 years will take your money, and that's what I'm doing. I want to be really clear on this because this isn't a dog and pony show. I'm not notarizing. I'm not trying to monetize this. Pardon me, not notarize. Monetize this. I'm not trying to gain clients out of this. I short politicians. So it may not work all the time, and it will only work until it doesn't, and then I'll stop. But at this time, every time that a politician speaks and has a major press show about how they're doing this in crypto and how they're doing that in crypto, I'm going to short the damn market and make out like a bank, make bank on it. It was a great week last week, and why? Because we know this market's going to puke stain off as politicians want to see their pontificate of what they're doing to the sector. Bitcoin right now sitting at 82.7. It looked, and I erroneously suggested with Chair Powell's comment that, well, after Chair Powell's comment 2 weeks ago on that Wednesday, that the turn was in as we bounced off that basically this number now around just a little bit marginally lower, is that the turn was in, and now I was waiting for confirmation of the full move of trebling, and I needed a weekly close above 105. Clearly, what's happened now, this entire thing is broken down, and it was broken down for the one thing that I said to you that could be the roadblock in Bitcoin, in the crypto market. Well, actually, two things. One is too much political commentary. Don't politicize Bitcoin. Don't make it into your campaign. And certainly, without question, do not try to decentralize finance. Okay, that's just my personal approach on this. And so far, it is an easy short. But the real major part of this is, you talk too much of tariffs, it's going to happen. Now, this is the most potentially ugly week of the year. We already saw, certainly in the last 2 years as well, we already saw a puke stain of an overnight market in Tokyo. In Tokyo, pardon me, we're going to see some difficult moments in this market unless the tariff talks get pulled back. That's what pulled Bitcoin back in these recent weeks after Chair Powell's very base reaffirming statements. And that look, again, as I said, I believe the turn was in, but once we had tariff talk come in, that all went away. The market will not detach from right now being a proxy if you look at NASDAQ until we see the S&P really breach 4,800. I think we've got a step down of the S&P to 5,200, and then a further step down to 4,800 to 5,000. But it has a lot of room to roam after that. The mean is ugly. If we all remember, all markets revert to mean. If you don't understand that, please do a simple graph, a longer-term trend of, let's say, what we now refer to as the Buffett indicator. Just look at the Wilshire 5000 to GDP, and you can look how far this market can fall. It's a waterfall lower. The Fed is not going to ride to your rescue, okay? It's not going to ride into your rescue. And until this market breaks, we will not see a shift of asset bases. That's why I'm looking at. So I'm going to reaffirm my concern of the market pullback in Bitcoin. We're based upon December numbers, as I said in January 25th, that I'm concerned that we get a pullback to 75,000, to a lesser extent 70,000. The number from based upon December numbers, a 36% retracement puts us in at roughly 69,000. That's why what I based my basically $75,000 to $70,000 call. It certainly, we need to see some affirmation here, and that can change course. If the Oval Office shifts gears on tariffs, we could see a little bit of light. But right now, this is sideways contained. There's nothing to do other than scalp theta. Last week, if you scalp theta, you made out like a bandit. And this week, we'll be doing the same. But watch this market, the equity markets are prone to a very, very extensive pullback this week. It could happen. We'll be watching this certainly. The overnight markets did not look pleasant. Japan, Tokyo was horrible, and this can continue. And obviously, we'll see how this extends on Wednesday. So that's about where this is right now. Manage risk before risk manage you. I want to emphasize that to you. I'm not cheerleading. I'm not cheerleading politicians, including politicians that I'm very supportive of their political efforts. And I do certainly like that when I see politicians embrace the future of DeFi. But I've got to tell you the facts. My business is making money, building wealth, and protecting wealth. And to me, that has to trump all my other commentary. Okay, so I hope that helps you for today. We'll be back tomorrow. If you have any questions, let me know. Remember, get writing. Let's scalp some theta this week. We'll be looking at situations on good rights on some of our ETFs, most notably IBIT, but I'll talk to you later on that. Again, hats off to JJ and Keith last week, who made a couple of beautiful trades using ETFs. Trades with an infinite rate of return because they created an enormous credit with very, very little downside exposure. So again, we'll be looking at more of those and be talking about that tomorrow. If you have any questions, please let me know. But otherwise, I'll see you tomorrow at the same time, 0900 Eastern Standard Time for Crypto Talk. As always, I appreciate your time, support. Again, thank you very much. My name is John Davies. I'll see you tomorrow. Remember, 2025, be the hunter, not the hunted. Thank you very much, everyone. Bye-bye.